Hey everybody, welcome back to the channel. So I was doing one of my daily walks that I usually do after the morning open, and I realized I never actually talk during these daily walks, and maybe it would be fun to just make a video outside, raw, not being in the studio and getting stuff done. So I'm about to go back to doing work. I don't have time today to actually make an actual video about the Dan Ives report, but I wanted to talk about that, and that's gonna be the subject of this video. Now I tried to do this video walking around, just kind of holding the phone, and my arm got so tired after 40 seconds. So I'm holding this up on this thing right here, and hopefully it doesn't fall. But yeah, let's get into it. Now, if you want a copy of the report, I got a copy this morning. So DM me on Twitter with your email in the first DM at @AmitIsInvesting, and I will send you the full 15-page report. There's a valuation model, there's their qualitative feedback, there's what makes Palantir a differentiated moat from other companies. So DM me on Twitter at @AmitIsInvesting, and I will send it to you once you DM me with your email. I sent out 100 of them already this morning. All right, Dan Ives, $25 price target. Why does this matter? So Palantir moved up 7% today, 7%. And if this wasn't just one of those reports where it comes out and people ignore it, or people say, all right, whatever, it's a price target. This is one of those things that moved the market for Palantir. I think it hit 1730, right now it might be at 1720. Right now it went down to 1690, went back to 17. But the point is, Dan Ives and that Wedbush report moved the market. Now, why did it move the market? I think there's a couple of reasons for this. Number one, Dan Ives is someone I've been observing for a long time. He is a unique contributor to Wall Street, to the tech space, and to CNBC. He's on mainstream media, Bloomberg a lot, but he's not one of those analysts that is mainstream. And what I mean by that is when you have a Bank of America analyst or Morgan Stanley, JP Morgan, etc., these are, very unique financial institutions that have lasted for the past 100 years that have analysts. So they have agendas, they have institutional biases, they have a lot of different things going on for them. So if a JP Morgan analyst is like, Palantir to this, Palantir to that, sometimes it's just ignored, sometimes it's not understood that well, and the proof for this is Bank of America, right? Bank of America upgraded Palantir from 13 to 18, and Bank of America, JP Morgan, Goldman Sachs, these guys do upgrades and downgrades on price targets 10 times a day on thousands of different stocks. Dan Ives is an independent research firm with Wedbush, and as a result of being an independent analyst at an independent research firm, and getting a bunch of plays right over the past couple of years that we'll talk about in a second, he's gained a level of credibility and trust that means that when he says to his clients, hey, we're looking at this, and this is something you should really consider, people at least listen. It doesn't mean he has to be right, but people listen. He's gained the credibility of not being as mainstream as Bank of America, but not being a no-name analyst that has no credibility. He has 80,000 Twitter followers. So people actually know who he is, and then the broadcasted distribution he gets on places like CNBC and Bloomberg also elevates his brand. So when he puts out a report like that, it really, really matters. Now, the second reason Dan Ives is really important is because he's gotten some plays right. He's got Tesla right, NVIDIA right, Google right, Microsoft right. He said to not buy Snapchat. He definitely got that one right. And so over the past 5 years, he's actually been able to show that he has been a little bit ahead of the curve. Not like Cathie Wood, Ross Gerber ahead when it comes to things like Tesla, but more ahead of the institutional people on Wall Street to be able to recognize where trends are going and then actually put his money where his mouth is for his clients and deliver outsized returns. I believe over the past 5 years, he has a 20% CAGR annual return. If you go to tip ranks, he's number 54 out of thousands and thousands of analysts on tip ranks. So he is one of those guys that has truly gained credibility and can back up what he has to say. So him initiating this on Palantir is really interesting. Now, over the past couple of months, he's been talking about Palantir. Insofar as March, April, he started mentioning Palantir on CNBC. He never had a price target, never said that the company is buying or anything. He just said, look, Palantir is one of those things you might want to look into. Today is when he came out and says, we think there's an outperform on Palantir, $25 price target. This is the company that you have to pay attention to. Now, what is the reasoning for why the report is the way the report is? We know why he has this credibility. We know why his report moved the markets. What did he actually say in the report? There's a couple of key takeaways. First thing is he called them the Messi of AI, which is really interesting. I mean, for someone to call Palantir the Messi of AI means that his research firm has done the due diligence that they've come up with to be able to predict that this is not a company that's just an AI imposter, as some people may say, but rather they're the Messi of AI. They understand AI at a fundamentally differentiated level. We know Dan Ives thinks that right now is 1995, that it's a fourth industrial revolution when it comes to technology. So obviously he's looking for the plays that can truly provide exposure to clients in AI that's not chips with NVIDIA and not full self-driving with Tesla and not everything with Google and Microsoft. So what are some of those niche plays that can truly become broad-ranging companies that can take over every single industry because of their AI-based applications and, more importantly, AI-based infrastructure to inform and secure LLMs? It seems like Palantir is one of those companies that's out there, and Dan Ives seems to believe them. So he called them the Messi of AI. Second thing he said is what differentiates Palantir in terms of their moat, and this was about 5 or 6 paragraphs he spent on this, is that their ability to ensure confidentiality, regulatory frameworks, security, and transparency within how the data is structured, managed, and then ultimately optimized for clients is where he thinks they're going to be able to grow at a massive scale. So basically, they're just like, look, when you have to implement data within an organization through some type of artificial intelligence model, through some type of LLM, you need infrastructure to do that. Now, we all know that Palantir has some of the best tooling infrastructure, but what they see as the differentiated moat, very similar to what Bank of America, that has an $18 price target on Palantir, sees, is the ability to confidently and securely implement that at scale. That thing that sounds kind of basic is like, oh, can you confidently secure that the data is there and that it has privacy and all that stuff? It seems like just Karp speaking philosophically about it, which people have said for the past couple of years, but that philosophy has transcended into people thinking that the stocks will be worth more because the product built with that philosophy, built with those guardrails, actually enables massive clientele growth because that's what the clients want. And so in a nutshell, that's what he believes their differentiated mode is. He believes that they can implement AI infrastructure into companies, and the TAM for companies that are going to be using AI is growing exponentially every single year, especially given where the market has started to recognize how AI is going, and the big clients that have started to use AI, which means all the smaller clients, all the smaller competitors are also going to have to use that to be able to stay competitive. He sees Palantir as one of the main companies that's going to be helping other enterprise clients and governmental organizations implement that technology. So that's kind of their core differentiating moat. The final thing I'll say is about their growth prospects. What really surprised me about their valuation model, which is in the report, is that they are being pretty conservative with their estimates. So they're assuming 16% year-over-year growth, which is underneath Palantir's 18% guidance. So they're actually assuming less than what management is going to assume. They're not going to hit 600 million any quarter. The most they're going to hit is like 595 or whatever by Q4 of 2023. And so they're going to be growing like single-digit percentage points quarter over quarter. That's what Dan Ives estimates. 530 this quarter, 560 the next, and then 590 at the end. They're going to come out with 2.2 billion in revenue, so a little bit on the low end of what Palantir suggested for full year guidance, and they're going to be growing full year between this year and next year 16%. So even with a 2023 that has only 16% year-over-year growth, he still thinks the company is going to be able to expand by 2024, 2025, and 2026 to be able to actually enable themselves to get to a point where $25 is a valid price target at this place. And that was really interesting for me to see in the valuation model, that they're being a little bit more aggressive in the years after 2023, but in this year, they still think it should be valued at close to $50 billion, 2 billion shares, $25 per share, a little bit even more than 50 billion bucks, even with only 16% year-over-year revenue growth, which begs the question, if Palantir can somehow come in with 24% year-over-year revenue growth, because we all think they're kind of sandbagging at 18%, what does that mean for the company? What does that mean for the stock? What does that mean for the growth prospects? Obviously, Q2 customer count is what's really going to matter, even more than revenue, and we know GAAP profit is going to be there, and stock-based compensation might go up a little bit. What really matters is customer count. Can you translate those hundreds of conversations that Karp is saying they're going to get into actual customers? Dan Ives also quoted Karp many times throughout the report. So just like retail investors are quoting Karp when he says, we're going to capture the whole market, Dan Ives has quoted Alex Karp and says, look, the CEO says they're going to take the whole market. The institutional guys are the same thing that the retail guys are looking at. Whatever the CEO says, everyone has to go on those words, which is why it's so important when a CEO is talking in these earnings calls. And if they say, look, our price target is 25 because we think they have a plan to capture the whole market, even if they're only growing 16% year over year in this space, what it really means is that it is likely, I don't want to say impossible, but very difficult for other companies to compete with Palantir over the next 5-6 years, even if they're only growing 16% this year, because the ability to implement mass scale AI infrastructure within an enterprise to confidently secure the data and actually make sure it's correctly implemented to be able to get the business intelligence that you want is just not as easy as people think it's going to be. So even with a less growth rate percentage, the other competitors just aren't going to be able to outgrow Palantir because they're not going to be able to do the thing they want to do, which means in the future, Palantir should be able to grow more. He even compares them to Tableau and says, look, we see other business intelligence services out there that exist. He mentions Tableau, he mentions C3, but C3 is differentiated because they have a consumption-based model, so they're going after a much smaller market, which is actually very correct because I've talked to someone who is a heavy investor in C3, and that's exactly the model C3 is going after. And with Tableau, he says Tableau is just the visualization of your data. It's not really an interpretation of your data at scale that allows you to do predictive modeling and simulations to then be able to figure out how to drive decision-making throughout the enterprise. So, I mean, look, it seems like he has the same thesis a lot of us have. His firm actually putting it out there just matters a lot more for Wall Street to being able to recognize it. And he ultimately has the credibility that justifies why we should care, or why Wall Street should care for Palantir a little bit more deeply than some of the other analysts talking about Palantir. So there you go. Dan Ives, $25 price target. If you want the report, DM me on Twitter, @AdamIsInvesting, and I will send you the entire report. Just put your email in the DM. And second of all, if you want more videos like this, more when I'm walking around, I have one of those stands where I can hold the phone while I'm walking so my arm doesn't like fall off. Let me know, and maybe I can do these more daily because it's a little bit more easier than being in the studio, and it's a little bit more fun if you guys get to kind of see the scenery. There's those goose. If you saw the YouTube short I made a long time ago, I told them to buy Palantir. They haven't bought Palantir. They were complaining today. I was like, look, I told you to buy. I don't know what to tell you. So yeah, thank you all for watching. See you in the next one.